Steve, I'll start with you. We had Jimmy Pethokoukis on in the last hour, and one of the arguments he made is that there needs to be more dynamic modeling around the impacts of all this trade and tariff stuff as it's happening and what it means for the economy. What do you think?
I think that's right. There are some reports out today where, economists are trying to estimate the impacts and say, you know what, we didn't get it right the first time, in part because we didn't get the indirect effects right. In part, the confidence channel is a big one. There's also currency channels. And then you have a big downdraft like today with the equity market. You have to model in what kind of economic impact a big downdraft in equities might have. So what you do is sometimes you pencil in small numbers for GDP, and they're offsetting things, and sometimes you pencil in small numbers for inflation, and there are other offsetting items. So, yeah, they're rethinking it, and most of the numbers I'm hearing, Morgan, are, pretty dire. In part, in the first place, the decline in estimates for global growth are the most dire, but also the knock-on effect to U.S. growth.
Kevin, I've heard a lot of commentary on our air, this idea that maybe we're a tweet away from a rally or a tweet away from a deeper sell-off here from the president. In terms of what we have gotten from the president on the heels of all of this in the last couple of days, it's been quite a series of comments basically suggesting that we could be settling in here for the long haul and that there are much bigger things at play, and now's the time to carry out a harder line stance with China. So what is an investor to do right now? What would you be advising clients to do?
Well, what we've been advising clients to do is to really look at the portfolio. Regardless of what happens with trade, you're much later in the cycle here, and valuations are not cheap. So you have to really look at consistency and durability. So regardless of what happens with trade, a very strong balance sheet here makes a lot of sense. Consistent cash flows, all of those kind of things still just mean all that much more in light of all the uncertainty we have surrounding trade.
Morgan? I just wonder at what point the credibility of those tweets runs out. You had Mnuchin.
That's a key question.
I mean, you had Mnuchin last week saying we're in the final lap of the trade negotiations. Either it was last week or the week before that he said that. You've had Kudlow come on and say talks are constructive. The president said, at what point does the market just disregard those kind of comments, which means that, for key commentators from the administration on the economy and on those trade talks, there may be a lack of credibility, in which case you have a sort of without a net here. You could fall and not have the ability to reverse it until you get China being the one the market believes.
So, Steve, what do you think is priced in at this point? We keep hearing that if there really is a global economic slowdown taking place based on a trade war between the U.S. and China, the market hasn't fully reacted to that. What would it take for that to become more of a narrative versus the tweets?
I think it's on both sides, John, because parts of the direness of the first round of tariffs didn't come to pass, in part because they were offsetting things in the economy. So I think what's happening now, and, Mike Santoli would know more about this than I would, is you're certainly unwinding that part of the market where 80% we're counting on there being a trade deal. That's being unwound, and now you're starting to figure out, well, what are the knock-on effects to confidence? What happens overall to GDP growth? I think if we start to see those lower GDP numbers, if the first quarter gets revised or the second quarter starts coming in weaker, I think that's when you're going to start to see the market reacting. And then there's another thing you have to layer on top of that, which makes it so confusing, is at what point does the president start to understand that there's a much bigger negative effect from just these negotiations than there would be potential upside from an actual deal?
Kevin,
and when you look at markets, if you look at the flatness of the yield curve, for example, you look at the belly of the yield curve, you look at global growth expectations, the IMF is moving more towards a slower kind of growth trajectory. Europe is quite very much in the doldrums. There's really not a lot in terms of an expectation for accelerating growth, except for the United States, where things seem to be getting a little bit better. If you got something positive, and maybe a lot of what's going on now is posturing, and what's going on behind the scenes that we don't see is actually much more important, but unfortunately we don't have access to it. Those kind of positive things could be a much better catalyst if we get something done. But clearly what's happened the last couple of days on the surface doesn't look or feel right. And if the market were to become very nervous and freeze up and not provide capital to the real economy, then you could see a slowdown. But there's just a lot of noise here. But you can't read too much into one tweet.
Guys, as we're talking, Steve, I'd love to get your take on this. GoPro, according to Reuters, is reiterating plans to move some of their production to Mexico from China for cameras that are bound for the U.S. They're going to keep production in China for non-U.S. bound cameras.
Right.
But this is exactly what the White House is looking for.
Yeah, I mean, yes and no. I think what the White House is looking for is it wants that production brought back to the United States. That obviously increases pressure on China.
Well, that's the ideal case.
Right.
That's what the president
ideal,
said,
right.
you know,
Agreed.
best decision.
Agreed. But it increases pressure on China. But remember, China sells to the world. The U.S. is some significant part of that. But if it's going to keep the GoPro, I don't know what the split is for GoPro in terms of its international versus U.S. Selling of products. But it's not all of it. It's some of it. But the other problem you have, Carl, is just that. That is not a bad outcome, maybe longer term. But in the short term, you have businesses redirecting their supply chains. And economists talk about what they call dead weight loss from that process. And those are like vice president of global international operations on the phone at 2 in the morning trying to find another place to produce a product that they may or may not be able to source in a different place.
Kevin, how long can this trade fight, this trade war go on before it really does start to have the kind of effects that some people fear that it'll have?
Well, up until now, it's been reasonably okay because there hasn't really been all that much done. But now with the levying of an additional 25% tariff on $200 billion of Chinese goods, potentially another $300 billion coming down the pike, now you're up around $500, $600 billion, which essentially covers all Chinese goods. So that would be a material difference from where we are today if those additional $300 billion were to come on. But that's probably not going to happen for a while. So the biggest effect right now would be some kind of loss of confidence in capital markets, where if investors were to get very nervous and stay that way for a while, that could be an issue. I think also you have to watch very closely all of this conjecture about things like Chinese dumping of U.S. bonds. We don't understand exactly how that would happen, given what China's looking to do with their currency. But nonetheless, this is an environment ripe for rumor and innuendo, which could affect investor psychology and, through that channel, the global economy.